Hello everyone, this is Jim from the Art of Finance. Welcome back to our channel. We are opening the week with you on 15th of November. Let's start with some news and then we will discuss some charts. First of all, this morning we have received data from China, industrial production and retail sales grew more than expected. That was a good thing, but the bad thing was new home prices fell, and this is with this fall, the problem in Evergrande and other real estate companies are in struggle. So when the price goes down, that means there is less demand and more supply. Just imagine like oil. When oil just goes down, when there is more supply of oil and then less demand, then price goes down. So if the price in China goes down, new home sales prices goes down, that means less people are demanding homes. So these troubled companies will struggle more and more on selling their houses and repaying their debts. That's why it was a mixed data release. And another thing today, actually not today, for tomorrow, like for this week, will be retail sales in US. Retail sales in US is important because a lot of people just waiting for recovery from this pandemic. So better than expected retail sales will be good for recovery. But at the same time, it will be bad for inflation. There will be more demand from the supply. Supply, I'm saying like the problem because the ports in US already full, and I have told this story before, but I will just remind. Donald Trump is just saying that like maybe he was right only on one thing. We need to bring back the jobs US, because right now it's so dependent, like US so dependent on daily, even in daily lives, on China. Almost more than half of the products they are using on daily lives are from China. So demand recovery in retail sales in China, in the US, goes far beyond expectations, then inflation will just go on like that, and it's not a good thing. We will see tomorrow. We will just receive the data and then we will just cover that one. And today is the final week of US oil contracts, and I'm expecting another drop on that one. We will talk about on US oil chart. As I said, this was news, and then let's begin with charts. There will be 3 charts today, and the first one is dollar index, the second one is gold, the third one will be US oil chart. We will talk about all of them, and then we will just speak which levels can be seen next days, next couple of hours. All right, dollar index is just gaining momentum with the expectation of rate hike to be decided by Fed officials sooner than planned. The planned date was the second, like almost like second half of 2022, but it was even not certain. They were telling that if we see real progress in unemployment and other things, we will do a full recovery. After full recovery, we will make 2 hikes in 2020 in second half. So right now people are expecting at least 1 in the first half of 2020, so 2022. So with this expectation, dollar index went higher levels, and this is pressuring other commodity prices as well. If we see a slowdown in inflation, and if we see just slowdown in recovery, then we may see a slowdown in dollar index as well. But if we see these trend like this, it will probably will go higher levels also. All right, let's look at what's happening in gold.
You are ready to win with us. GAN Market.
All right, we are on gold chart, and as you can see here, there is a trend on that one. As long as we see this trend goes up, if the price goes over this trend line, then we will expect to gold prices go higher. But let me just show you this area. It seems that gold has spent all its fuel. Reason is all right, US 10 years are low already, dollar index high, and there is problems, but yeah, that was it. So the price is high already from this point. If we see 10-year bonds go up, like for right now they are trading at 155. If we see 160, 170, 175, then just expect on 160 something like this, on 165 something like this, on 170 something like this. It will just go like this one by one when we see 10-year bond high. Otherwise, like because real yield of 10-year bonds are negative right now, and it cannot go like this forever. Otherwise, US government cannot issue more bonds. People won't buy US bonds, 10-year bonds. So it has to go up. The inflation is so high, real yields is so low, actually negative, so you are losing money. It has to go up. If that goes up, the gold prices will go down. Let's look at oil prices. All right, we are on the chart of oil. As you can see here, oil prices are not going forward. I will just tell you something. You know, like in US, there's a problem of the inflation, but the calculations are made year over year, and I will just show you something. At the beginning of November, it was 84 already, and right now it's trading at, we are at the middle of the month, and it's trading at $80. And if we just receive at the end of the month something like 76, maybe like a 75 area, even this area, then there will be $10 decline in November. So if the prices goes down like this, then the comparison between the price of November 2020 and November 2021, then the gap will be less. And from that point, we may see a slight decline in US inflation rate. That will be the most important thing in US market. Then we may see relaxation in Fed officials. So I'm not saying Fed official can interrupt these one, but US has the power to control the oil market. They have power actually. They can just ask like some more that one. OPEC is deciding, okay, I understand that one, but at the same time, US is also another global producer of oil. They may do something, and lobbyists even do something, and then they can just help the government on this way. And it's not a big drop, it's not a big change, but still from all the time high level, they may just see a relaxation month over month. Compared to these levels, it will be less, and they can just slow down the inflation with oil prices decrease. This is a scenario, and intervention in this market can be seen because Biden is losing trust of US people. If this inflation goes like this, he will do whatever needed to control this inflationary scenario. So my expectation is that one, and also at the same time on 19th of November, on this date, it will just the contract of December contract will end. So on the last 3 or 4 days, we generally see a drop down in oil. So I'm expecting the same one in here. It's making its way already down here, but on the first 2 days, it's making another buy option. So we can see a V shape in oil prices in this week. Alright, thank you so much for watching us. We will be together in the afternoon news. Bye. Thank you so much.